Hi, Dave Cotter, CEO of Hybrid Debt Fund. I want to spend a little bit of time telling you about the story behind Hybrid Debt Fund. How did it come about? Well, about 3 years ago, we were on a retreat up in Flagstaff, Arizona at Little America, and the team was sitting around and we kept having these discussions about how we were going to add more value or delight the client with a simple funding experience. And we all came to the conclusion after a lot of whiteboarding and little sticky notes on the wall that we really needed to have our own direct lending platform. So that spurred us on, leaving that retreat really excited and enthused about, okay, we're going to venture into this journey of having our own fund, setting up our own platform, and finding ways to really delight the client. So the next step really was, well, who do we want to become? And what is that going to look like at the end of this? And so through a lot of discussion in the marketplace, a lot of deliberation, I was actually representing a group out of the Midwest called Protective Life. And they have this product that was called a participating loan. And I remember I started to learn about it. I studied it. I actually represented them. We closed the loan that was over in Dallas, Texas, about a year after we had this discussion. And I just fell in love. I thought, man, this is a perfect strategy where you can have a first deed of trust. You can go a little bit further up on the capital stack. You get a repayment guarantee from the sponsor. You get a fixed coupon that comes in regularly. And you also get an upside participation of about anywhere from 25 to 35% of the net cash flow. Plus, you also get the net reversion in 3 years when they sell or decide to take you out. So I thought, man, this is the perfect blend of mitigating risk of the downside, protecting the investor's capital by having that first deed of trust where you could foreclose if you needed to. And you also have the guarantee from the sponsor. Plus you get that upside equity-like feel without actually being in the LP. And so you don't have that additional risk of being part of the limited partnership alongside the risk. So that really sparked our interest. And we said, well, let's go out of market, see if it's accepted, and spent quite a bit of time just getting a feel for developers. Would you like this? Does this work? And it was pretty renowned yes from everybody. And specifically because we wanted to say we're going to fall below that threshold of 20 million to do 5 to 15 as their marketplace for it. And again, it was a resounding yes. The end game for us really is to build the fund over the next 7 to 10 years of $2 billion of assets under management. And so once we understood we didn't want to be a hard money lender, we wanted to be a private credit commercial real estate fund that had an institutional grade component where we can build niche products that add value to the marketplace and give the end user a streamlined process. And so that's where we ended up starting. This is where we ended up going today. And we decided, well, let's put everybody into a pool of loans where they're going to come into an equity pool, closed-end fund. And then what we would do is starting off, we'll do more individual loans with side letters in the fund. And then as we build the portfolio, we'll make it more diversified just to fit within the total fund. And then pay a preferred return, 5.5% today, paid out quarterly, plus they'll get that additional pop for what we would consider the shares within the fund of the equity pool to get in that 11 to 13% range net IRR over this kind of 5 to 7 year period. And again, we feel like we get the opportunity to create these distribution channels through these large originators that we have relationships with to see deal flow. And we get to choose and underwrite and mitigate the risk the way we feel like we need to through the sponsor themselves, also through the real estate and underwriting fabric that we put in place and the metrics to make sure that we are appropriately looking at the risk and also giving our investors the returns that we believe is deserved for that commensurate risk. So we're excited about it. And we're obviously looking for a partner to come along the journey with us. At this point, we have the majority of the team. We're looking for a capital markets fundraiser right now. And we also have process in place. We have all of the underwriting metrics. We've modeled it. We have our fund administrator in place. We've set up our marketing infrastructure. And so we're prized and ready to find somebody that's a larger, call it lead investor, to come alongside with us and partner with us to build this out in this first fund, which will be around 50 million. And then we'll clip in a loan participating lender behind us to take up to that 50% of the stack and fill the rest with our investor base so we can continue to spread out more and more deals. So that's a little bit about the history of the fund and where we're at today. And I'm just excited, hopefully, to continue the conversation and answer any additional questions that you might have for me as well. And look forward to speaking with you further about this vision and journey.